Let's go to YouTube. Today, by the way, is, and I know I don't do this often enough, it's Thursday, June 13th. So if you're tuning in on any other day other than June 13th, you can continue to listen because there is great content available. But just know that you're probably looking at charts and things that may be a little bit dated. Just so you are aware. And we're going to save that. And then we've got background music. I'm going to turn on my Do Not Disturb. There we go. And we've got Savvy Trader. Let's see, what place am I in today? Fourth? Yeah, fourth. And 52% year to date. Wah, wah, wah. I'm beating the CEO. Hamed is only up 29%. He's only got 36 events. I mean, I have 43 events. So, you know, morning, Mike. Let's see. Seeking Alpha is still 20% off. Let me just make sure the TrendSpider did not change their offer. They did not. We're going to go over here. I want to see if the GameStop options news is out there. They got breaking news, jobless claims. We might as well put this in. No, we don't care. Well, yeah. I should put that one in. We're going to put that one in the front. But there was an enormous options. Morning, Joshua. Yeah, I guess it's not in here. GameStop's annual meeting is today, so be aware. But there was an enormous option sale, and the assumption is that Roaring Kitty, the PPI data is out. Let's see if it's on the breaking news up here. Oil's less raw. All the Tesla news. Let me go to and turn it on so I can see what crap I've got going on. Let's see. There we go. Ooh, I got an ad. Yay. Skip. There we go. I shouldn't include the Tesla news. I know I've got it on my notes. Yeah, let's just include all the Tesla news. We'll include that. But I don't see... What I don't see is, yeah, I mean, I'll put this in, but we'll put in some charts too, because Elon tweeted out that they overwhelming support for his pay package. And the move to Texas. Now, the next round of this goes back to the court in Delaware. And the judge can say, she can turn it down. But it's going to be, because she said it didn't go through the proper steps, now they've gone through shareholder stuff, it's going to be tied up in legal stuff. But it's a fantastic, fantastic news for Elon. So, yeah, that's why it went up, Brian. And Brian, I do assume, I have in my notes today, the ARC, $2,600 price target, and then shareholders approved the package. This is 100% buy Tesla. I mean, you've got momentum on your side, that 177. As this news started to come out and you gained confirmation yesterday, that was the trigger to buy Tesla. So you just need to, buy Tesla. I mean, at 190, where it's selling right now, 191, already up 8%. I would say your resistance level, I mean, it's heading right for that 200. So if you want to buy it for a 5% pop to 200, I think you're fine. But that 200 is going to be a major, major resistance level, because that valuation is just, it's a little high. And if we just take this and we put this, we'll go back here. We want to cross as many lines as we can so that that's let's go up to 200. I mean, that 198. So let's just say 198. 200 is going to be kind of the round number. So I would view that as a major resistance level on it. I'm going to pull that down. We're going to push this right above that 415, because there is your the 2 times you were oversold. I think there's another one back here. Well, we're just going to look at this year. Well, that goes back to 2021, but yeah, I mean, you're seeing the pops here. So could you get this kind of move from 170 to 280? Maybe. Skeeter, I'll look at BABA for you. Let me finish the scans real quick. Let me just finish looking at some of the top news. Producer price index 2.2 versus 2.5. Yeah, I mean, this is... It cost less to make the goods. So it fell from 2.2 to 2.5 to 2.2. That's macro. I'm not going to include it. Yeah. Jobless claims rise 13K more than expected. So the jobs market this is July or September. You may get a cut in July now. So, Buffett bought more Occidental. I got Georgia on my mind playing in the background. Hot news themes, ETF gainers. They were all Bitcoin, by the way, yesterday. Morning, Chris. Here, let's do BABA real quick for Skeeter, because I know I'm going to forget to come back to it. I'm done with the news. I'm going to get into scans. BABA is what it is. It's just sideways. There's gaps all over the place. This isn't one that I want to trade. It's not one that I want to trade at all. Algorithm loses you 7%, but buying and holding loses you 25%. We talk about bottom left or upper left to bottom right. I mean, that's BABA. Does it make sense to get into this? Nope, not for me. So Skeeter, I mean, that's personal opinion, but I'd rather wait until we're at 120 than to buy it at 70 and see it go down to 60. But, you know, again, the Chinese government is running this company. The Chinese government is saying, you know, we're not going to let this thing grow. And that's a problem. So, that's a problem. Okay, let's do some scans. And if Brian was here, I emailed you. If he is here, I emailed you everything that you need. Okay, let's do some scans. I got a ton of... oh, what's happening? Why are those not showing up? I know they're up. They're up there in the cloud. I know they're up there in the cloud. So I gotta quit my notes and then open it back up. Morning, Laurel. Morning, Tyler. Bisco. There we go. And they are all opened up. There we go. Scans. I got to get a new computer. This one's just a little too slow. A little too old. Snowflake. And QCLN. You're welcome, Skeeter. I mean, Skeeter, here's the thing. In my mind, and again, take this for what it's worth. It's just a douche on the internet. There are so many good opportunities out there with stocks that are moving bottom left to upper right. There's not a reason to get into something that's moving upper left to bottom right. There's just no reason whatsoever. Oh, leveraged ETFs. TSLR, TSL, Coin Long, TMF, UCYB, URTY. I mean, look at this is up 15%. TSLR, which is a 2 times bull, the granite shares long. I mean, that's up 14%. TSL, which I think is 1.25. Yeah, that one's the less levered. It's up 9%. Low cost Vanguard. VSS. I'm not going to break that out for one. Spider sectors, there's going to be nothing in here. I'd be shocked if there's... Let's see if there's anything on the front page of FinViz. There was an NVIDIA interesting inside buy. I have to shut this down, I think. Let's go. Zillow Group with a $42 million buy. This guy's got... It's got Z and ZG. I don't know what the difference is between Z and ZG. But, I mean, that's a... Poof. Director. President just sold $282,000 worth, but Director just made huge buys. What does J. Hogue own? Let's see. Netflix, Zillow Group, EA. I mean, he probably sits on these boards. GoDaddy. He sold $135 million of that. Wow. That's an impressive one. Let's get back to the scans. Let's see. Nothing spider sector. Let's go to the watch list. There's got to be some on the watch list here. So Apple yesterday had a crazy last 30 minutes, and we can go into it, but I'll go into it on the podcast. It was just a bad end of day. And it's kind of leveling out. I mean, it's up 0.5%, but I think I'm going to relog in here. Let me log out and then log back in. Because this does not like where it's going. Log out. And then we'll log back in. And that usually takes care of a lot of this stuff. Although, I think it's Safari. You know what? We're going to close down that. We're going to come over here. And we're just going to relaunch it. Launch. We're going to go to watch list. Roger Ferguson is coming up. That dude's been right. He's a former Fed governor. He has been spot on. MHO. Snow Powell. That's one that I want to buy. I will add position in this. ANF, IWM, BKNG, Lift, ELF. ELF is at 200. IWM buy under 200. ELF has just killed it. I mean, ELF had that pullback from here to 17 down to 150. The algorithm played that one perfectly. Algo perfectly. That's a good one though. Watch list. Let's see my own personal, not owned. Zebra. Do I like that chart? Let's see. It's software. Put that in. ZBRA. Upstart has had a little bit of a. I'm not going to put that one in. Enphase with solar. I mean, here's the problem with Enphase is you just put the weekly on. We'll put it in there. What the hell? If somebody wants to buy it, we'll put it in there. PDD. Mass Timu. You're running right up against that 149. KWeb, Hub C, which is the Israeli company. GEHC, that's one that I think is a good one. I should probably put that one. I should put this in the watch list. I'm going to put this in the watch list. Because I like all three of the GE ones. Yeah, we're going to put that in the watch list. Okay. Let's go to the Dow. Dow 30. I do. You know, one of the things, like the Dow is down 100 points, 150 points or something. I don't know what it's at right now. We can look at it. I want to show you what TrendSpider you can do. PDD, BKNG, we've already got. Yeah, I do. MCHP. And then we're going to go to the S&P. BKNG. Okay. We'll go to the strategy tester. And what I want to show you, some of the things that I do in TrendSpider, is we'll go to the 4-hour algorithm. And then this is how you can use your watch list. And the SMART checklist, by the way, I don't use it. I should use it, but I don't. But if you want to just look at, like, say you want to look at the Dow, type in the Dow up here, and then I think you can just do Dow 30. I guess I don't have a Dow set up. Where is the Dow? I thought I had it up here. Simple. There it is, Dow 30. I was going to say, I know it's in there. And say you want to know, why is the Dow down 100 and some points? And what's the biggest loser on the Dow right now? You can see it's Merck at down 0.6. Intel, we can see, and then you can run in the 4-hour algorithm. I know, Chris, I still don't use it. I know. It's crazy. This is why I say, Chris, I don't use probably 80% of the great portions of TrendSpider, because I got in as an early user of TrendSpider. And so all of the additions that they've added, like the go, no go, like the chets, like a lot of those things, I just don't use. And I should. It's my fault. Nobody else's fault but mine. AMZN. So if you want to see, like, you can use these lists to see, okay, where's the 4-hour algorithm? What does it do? This one, AMZN, just randomly, makes you 34% over 2 years. You make 27% buying and holding. Your average win 6%. It has you out. But look at that nice little double top here at around 320, and it's at 300. If you believe in AMZN, maybe it's still going up. You can see I've looked at AMZN before. That bottom portion line, and then wherever you put the top portion line. So using TrendSpider, there's a lot more to it than I actually use. And it looks like the markets have taken a little bit of a turn down. Let me see. No. Futures still look up. We can go over here to Seeking Alpha, and you can see the live ones. I mean, Dow's down 0.21. Okay, I'm gonna open up some of these. Unwarranted optimism. Sell. Morning, Mark. Morning, Daniel. Yeah, smart checklist is I'd agree with you, Chris. And it's part of it is, and I probably need to do this, is just take a week off and enhance my system. Oh, this is huge. Yeah, that's huge. That is big. Okay. Good morning, Moneza. Wow. This is from yesterday. You know what? Somebody asked me about Seeking Alpha, so I'm sorry, Super Micro. I am going to put this in with the request. There we go. Okay. Bum, bum, bum. We're going to go home here. I'm going to go to the Qs where we are up almost 1%. Probably driven by NVIDIA. Yeah. How do I position that, Mark? I worked for them for 6 months. I as an employee, and I was. So here's the full picture of that, Mark. So you understand kind of where I'm coming from. I was a Time Warner employee. I was an executive at Time Warner Cable. I was in charge of Northeast Florida, which is St. Augustine, Palatka, and other cities. Comcast had Jacksonville, which is the large portion of Northeast Florida. And what happened was in August 2005, or it might have been like 2004, somewhere in that neighborhood, there was a big cable company called Adelphia. And Comcast wound up purchasing Adelphia, but swapping systems with Time Warner. So it was August 2006. My Time Warner system actually one day was a Time Warner system, and then the next day was a Comcast system. We weren't allowed to talk to Jacksonville. We weren't allowed to do anything, so I didn't know anybody. I show up in the Jacksonville offices as an executive with Time Warner Cable and now a Comcast employee. And I was treated not great upon entry. And so one of the key metrics during that time of cable was how many households, your penetration percentage. And so that measured how many households of a percent of the plant that you passed actually did you have at least one service with. And so, remember you had 3 services. You had cable, internet, and phone. And in 2004 and 2006, it seems crazy, but not everybody had high-speed internet. They were still using dial-up. They were still using other forms. And the internet was not as prolific as it is today. So I show up in the offices, and the first question that they asked me as the marketing executive was, what's your penetration percentage? And that's just kind of standard. And I couldn't tell them beforehand, but I told them, I said, we have 73% penetration. Now, industry average was, I think 50%. Might have been high 40s, but I think it might have been 50 at that time, because as high-speed data came out, but I had 70. And that was like, nobody could believe that I had 70, and I couldn't make it public, to anybody, but I had 70. I was just a damn good salesperson, marketer, and I knew what triggers to pull and how to get people to buy. And so even in low-income areas, I would give low prices to certain people, and I would fund it with different ways. And I was able to do a lot of little things that would make it profitable for the company without kind of the company, raising red flags and blah, blah, blah. So I said, yeah, we got 73% penetration. And I remember their marketing director, the director of marketing, looked at me, and he goes, that's amazing. We have 23% to lose then. And I looked at him, I said, what do you mean 23% to lose? And he went into this whole theory about we don't have the customer service support staff to support 73% penetration. It would cost us too much to hire people to support that. So what we're going to do is we're going to raise your prices. And they were going to do crazy price raises while pulling channels off of the TV service to get people to subscribe to the digital cable service. It was this, hey, we're going to make more with less. And I said, that's probably not going to work. I ran the numbers quickly in my head, and I said, it's not going to work. You're going to make less money. And he swore, well, no, because people, they need the service. They're going to disconnect. And I said, it's just not going to work. Then over the next week, they put me in charge of actually taking all of Florida. And there were like 15, 20 systems that they put me in charge of bringing those systems onto Comcast because they said, you seem to have a good head on your shoulders, blah, blah, blah. Then what happened was they told me I got to look at the budget for the following year. This was August, and we were just starting to do the budget for next year, and I got to look at the budget. Now, there wasn't salaries broken out. There wasn't a lot, but again, I had a good head for numbers. And I looked at it, and I went into the director's office, and I said, hey, my job isn't budgeted for next year. Kind of got this shocked look on his face, and he said, what do you mean it's not budgeted for next year? I said, it's not in the numbers. And he goes, how do you know? There's no detail in there. I said, the numbers don't add up, Vic. And he goes, no, they add up. And I said, no, Vic. I said, they don't add up. Let's go over this a little bit. And I explained it to him. And he said, yeah. He goes, to be fully clear with you, we don't have a budget. I said, why am I here busting my ass integrating all of these 15, 20 divisions into this thing? And I said, when you're not even budgeting me for next year. He goes, well, if you work hard, you can get it. I said, okay. And then Earthlink came to me and they said, hey, we want you to work for us. Essentially, at that point in time, I went and took the interview with Earthlink. They said, and it was November. And I was getting a lot of heat from Comcast about, doing the rate increases and things like that. And I was trying to mold them into my thinking rather than mold into their thinking because the numbers just didn't make sense. My long story short, I wound up taking the job with Earthlink, leaving. They treated me very poorly on the way out. And so I have a little bit of a bitter sense of Comcast. But I will tell you, I did have a meeting with Brian Roberts before I left, their CEO, their current CEO, and the guy who's multi-billionaire, genius man. And I kind of explained to him about what happened, blah, blah, blah. And he said he'd take a look at it. Nothing really happened. And so, in checking in with the system after that, they did exactly what they said they were going to do. So that means to me that I don't have a lot of positive things for Comcast. It's not a business that I would invest in. Now, I wouldn't invest in Charter either. And I wouldn't invest in cable companies. Having been in cable companies, Wall Street doesn't provide them the multiple that they're actually probably deserved because there's competition all over the place. This is becoming a commodity. Look at, Elon has Starlink. T-Mobile has a freaking device that you can put in your house and get 5G services at your house. I think Comcast has played games for years with government subsidies, with support of their stuff while taking money away from consumers in an unfair advantage. That's my theory on Comcast. Trading below its 200-day, I would tell you that I think it gets down here to 32. I just don't have faith in this business at all. And it's because, I was on the inside. I have friends who still work there today. I just don't have faith in the business. Now, here is it, number one on the quant. The quant loves it. When you look at the valuation, again, the PE is crazy low. Their PEG, crazy low. When you look at their profitability, it's 70% gross margins. I mean, that's how much they're ripping people off, in my mind. And, my parents have a choice between Verizon and Comcast, and we just go with Verizon. It's just a better service. So I don't have a lot of faith in it. Now, when you look at the Wall Street target, Wall Street, $47, 25% above. So I just would say, Mark, I'm not a fan, but take that with a grain of salt because I am slightly skewed on that. But in my mind, it's kind of one of those educated things where, if Enron taught you anything, it's don't invest in the company that you work for because you know too much. Morning, Brandon. That's my take on that one. So hopefully that kind of explains stuff. I didn't go into the full story because I don't want, names and, will be changed to protect the innocent. This was a good one, by the way. This, we're going to talk about divergence and super micro. This was an interesting one. Ulta Beauty. And it's a great Substack on that one. This is all the Tesla news that you can find. This is the Tesla robo-taxi dreams. Tesla $2,600 price target. We're going to talk about Microsoft giving them $10 billion and Apple giving them nothing. We're going to talk about more Apple. The market is irrational. We're going to talk about Gene Munster's take on Apple, which I think is a good one. And you read the comments down below, and it was just a roasting, an absolute roasting. We'll talk about Katie Stockton, who is a technician. Talk about Apple and where it could go. We'll talk about Apple. We're halfway there compared to the last time this run took place. We will talk about the stocks that hit 52-week highs or all-time highs yesterday. We will talk about elevated equity risk. This is a really interesting options play that they put out there. I also would like you guys, I posted this in the newsletter yesterday, but it's worth putting out there. Jim Cramer had his head explode. So go to the newsletter and we'll talk about that one. So that's kind of the show. And then we got the social requests. So that's everything. If you're new here, subscribe. I'm here every morning showing you support and resistance levels for things like the Qs and SPY. Whatever I think is relevant. We will also talk about stocks that are moving. If you're interested, I do have a core portfolio and it is on Savvy Trader and you can go and follow it completely for free. Just go to savvytrader.com. Well, let me see. I think I actually have a link. Just go to the link tree. Everything's on the link tree. Down here is the link tree. Follow my trades for free. Savvy Trader. You can follow it, sign up. All of the stuff is on here, so we'll go over everything. I don't think I see anything else, but we're going to talk about it. So, okay. And Mark, please take that Comcast stuff with a grain of salt. That is my history of what went on. I used to buy insider shares for Cox. When Cox was a public company and I worked for Cox, I bought insider shares there. They gave us a 10% discount off the average price during a quarter, and it was taken out of our paychecks. And I made a ton of money on that one. Brandon, that guy's good. That guy's really good. The Options Oracle, yeah. I talked to him because I'm trying to get him over to TrendSpider. And I chatted with him a little bit about my strategy on making money and stuff. And he's... and I don't want to speak for him, but he's struggling in that when you start to do this, you realize how much time this takes, sharing stuff. And so he's struggling monetizing it because he does make a ton of money doing it. And his trades that he publishes are actual trades. And he's like, hey, there's a lot of people that are putting bad content out there. So, yeah, Mark, I mean, I'm never going to invest in Comcast. And it's just one of those things. I mean, I may trade it every now and then, but I can't imagine a company with that customer service history being something that I would subscribe to. Now, Comcast wants to take over the section that I live in here in Atlanta. I'm a Charter area, and I had a good conversation with the Charter salesperson that came to my house the other day, tried to sell me Charter, and I said, I use YouTube. I know the difference between, I know the architecture of the technology, and this is why I use AT&T, and if you're interested in AT&T, I got a referral program right there for you. But the architecture of cable is you do share with your neighbors up and down speed. And because the one wire isn't individualized, the sharing with the neighbors is such that they monitor the download and upload and limit you on the upload. That means when I'm doing live here, the upload would be limited if I had cable, meaning that you guys wouldn't see my beautiful face, my money maker right here. My money don't jiggle, jiggle, it folds. But again, that would mean that it would be a little bit degraded. I think that's what it is. But yeah, so he told me, it's kind of the thing. And I explained to him, I said, AT&T's just, the fiber is direct connection, and I get 1 gig symmetrical. They can't touch it. And in fact, they were more expensive for slower speed. So I'm not saying invest in AT&T. I'm just saying from a customer service standpoint, in that I think AT&T actually does it better. But the AT&T stock is not a winner either. And so I just, you're at a race to the bottom. That song is awesome. My money don't jiggle, jiggle. It folds. I like to wiggle, wiggle. Faux show. I don't know. Some dude just started to rap. Brandon, go down the rabbit hole of finding the origin of that on YouTube. Because, it's a story. It's a story, man. I'm telling you. How is this? Wait. Did we change? Hold on. Something happened here. Let me see. Huh. Data analyzed 24 months. Oh, they changed. That's what it is. Something happened here. The backtesting isn't correct. I think it's backwards. 71%. The performance chart below is a little bit wrong. I got to email TrendSpider. Their calculation, I think, is a bit wrong. Because this tells me I'm winning. I mean, that's the asset performance. The equity is up 57%, 56.64. And then it's backwards. What's that little harsh mark for? I don't know. I'll ignore the percentages. For now. Okay, I'm going to hit record. Good morning. It is Thursday, June 13th. It is Tesla Shareholder Day. We'll go over stuff. What happened yesterday. There was a crazy last 20 minutes for Apple We'll go over that. We'll go over GameStop has a crazy thing going on. We'll go over that. We will go over how much more Apple has to run. We'll go over Tesla, all of the stuff going on with Tesla. Ulta, I read a great article on Ulta. Uber and Shop. We'll go over the Broadcom earnings. Crazy, crazy stuff. We'll go over social requests, and then we'll go over the scans. So I've got a lot to go over. First, let's go over QQQ. Where are we? We're at 474. And yesterday's afternoon candle was a red one. We opened at 474.9, and we closed at 474.14. We did have a last 20 minutes of selling, but you still have confirmation. There is a lot of talk. Hey, we're at the high. The Fed isn't going to lower rates until only one time this year. The PPI came in lower than expected, which is good news. Jobs came in higher, a higher number of first-time claims. That's better than expected because, again, bad news is good news for the market. So in the jobs report stuff, with the PPI coming down, good news is good news. So we're finally starting to look at a market that is really kind of taking hold. I do think, and I continue to say this, that we probably reach a point where we're at all-time highs and then something takes us down. So be prepared for that. But even on SPY here, you're seeing the support level of 523, previous all-time highs. We could put it up here at 532. We're at 541. On the Qs, you saw those support levels. So everything seems to be okay. What's moving today? Well, Tesla. 7% after Elon Musk announced social media that his pay package will be confirmed and the relocation to Texas will be confirmed. Right. Broadcom, I talked about it yesterday. I own, mid five figures of this one. I made a ton of money. It surged 14% after they beat and raised outlook plus a 10-for-1 stock split. Biggest losers, I talk about this kind of stuff all the time. Virgin Galactic not making money. They did a reverse stock split to try and bolster up the stock to a higher price so that they can keep the listing. Dave & Buster's, again, consumer. It's an expensive place to play video games. People aren't going there. Plummeted due to underperformance in Q1. It is simple. Invest in what's working, which is AI. Nvidia is up 3%. Apple was up 2%. GameStop was down 16%. It's up 3% before. There's some strange options activity out there. Tesla's up 7% in pre-market. SOFI, which is another one, up 1%. So you can talk about all that stuff. It was clear yesterday. If you didn't get the newsletter, I included a link to a video where Jim Cramer absolutely loses his effing mind. And he says, GameStop, the apes have won. And he says, I'm on Reddit. And he goes off about it. Since he did that little thing, GameStop is down 20% since Cramer declared victory for GameStop this morning on live TV. Yeah. It was clear. It's absolutely clear. Again, if you want to watch that, sign up for the free newsletter at dailystockpick.substack.com. You can go over to my link tree, which is the link down below, and there's a link for it there. But again, it's free every weekday. Let's talk about elevated risk. We talked about hitting the all-time highs here. This is a great article, and it goes over part of the problem is the VIX, which is the volatility index. It's at 12. So when you typically see these run-ups, then the VIX, which is, again, a volatility index, the VIX will be at 20 or over 20. Something is up. We're in this bull market and the VIX hasn't hit it. This is an interesting take on it because what they're saying is, hey, there's an opportunity here to play an option spread. And they give you one for S&P and they give you one for European. So if you want to read that, read that. We're going to go and look at the chart of the VIX though. What I want to show you is how far it's come down. Now, this is crazy. Again, in October, you can see, this is the normal reaction of the VIX. The October to December run, it was up. Okay, October 30th, it just started crashing. We will probably start to see a rise in the VIX. Just as simple as that. I mean, again, the fear and greed index isn't crazy. There's nothing that's going on in the market right now that tells us that we're going to stop. Do not listen to those naysayers. If you want to put on some protection, again, that article that I pointed out before has some put spreads for you. If you don't know options, don't play options. I am not looking to protect myself. I am looking to get in more. I'm looking for ones that have pulled back, like Celsius. We talked about like AppLovin. We talked about like some of these software names that are pulled back. There were quite a few yesterday that finished at all-time highs. NVIDIA, Apple, Microsoft, Hewlett-Packard, Google, Oracle, Applied Materials, Lilly, Eli Lilly, Broadcom, okay? We've got NVIDIA, Apple, Microsoft, Google. They're all in the core portfolio, and Lilly. So what's that, 6, 7? Let's see. It's a bull market. Many of those are in I own Broadcom. I want to own Oracle. I've said Hewlett-Packard Enterprises just bumped up at an all-time high. That's SMCI and Dell. That's who they're competing against. I own Dell. AS Applied Materials, I don't own them. I don't own it. I have exposure on ETFs. But understand that those are the names that are driving this market. Do you notice anything? This is all AI and GLP-1. They hit all-time highs. We're in that market. Go with what's working. Now let's talk about Apple. The last time this thing ran, which was November to January, okay? The beginning of November, we went up 19%. We dropped down 19%. We went there. When's the next time it's coming back to 200? We can talk about Apple. That is still the support level. Understand, it's still the support level. So here, the high on yesterday's afternoon candle was 220. That is the new resistance level, 220. So if you're going to buy at 213, understand 220 is your resistance. 200 is your support level. Now, what I want to show you is I want to go to after hours, and I want to show you 5-minute candle. Because yesterday at 320, this was at $220. Okay? During this time, it just crashed down 3%. Apple does not do that over 45 minutes. Apple does not do that without some type of pressure. That is a danger. So again, just a little bit of danger there. Do you want to buy here at 214, 213? I would say no. What I would tell you is wait for the 4-hour algorithm. Okay? The algorithm doesn't have you out on this one. Doesn't tell you, hey, you want to get out. It tells you, hey, you're in at 169. This 4-hour algorithm is absolutely a game changer. It is a genius thing. I love it. If you want the 4-hour algorithm, how do you get it? You go over here to the link tree. And it's right here on TrendSpider. You can get it. Click on that link. You get over here. It's $53 a month. You get 6 months for free. Again, you just need that. Then you're going to go back to the link tree and you're going to email me. My email address is right up here. Just email me. I will send you back the 4-hour algorithm, the 65-minute algorithm, the 5-minute algorithm, all of my custom watch lists, all of the alerts that I have. I will send you everything. Everything that I use, I will send you. And understand this. We were just going over smart checklists, which Chris says is a game changer. I don't use it. I don't use a lot of this stuff on TrendSpider. But my system is my system. It's just about getting you the tools that allow you to be able to be successful in this market. That's all it is. But in the last 30 minutes, that's exactly what we saw. We saw that pullback. And again, if you're looking for a pullback, 200 is your support level. Now let's talk about Katie Stockton. She is a technician. She doesn't care about the fundamentals. She probably does, but she doesn't necessarily look at them. Apple has lifted its long-year trading range in dramatic fashion. As always, we would await confirmation of the breakout, 2 times weekly closes above 198 before enacting it to manage risk of a whipsaw. A measured move would target 240 for this one. So what she's talking about is you go to the weekly chart. She wants to see 2 weeks that close above 198. We just said, hey, that 198 was the old support or old resistance because we double topped out of there. She wants to see this one close above 198. We will close. I can't imagine between today and tomorrow we go below 198. But if we close next week beyond 198, and I would assume we do because there's not a whole hell of a lot of news that's going to bring this one down unless people start selling. But if we do, then she says, hey, that 198 turns into resistance again. So 198 or 200 is kind of where you want it. And that's the way I'm playing it. I am not adding more here. I am enjoying it. I am not trimming. If it goes to 220 and breaks down again, I may start to trim. But I'll do it in probably a fashion where it doesn't cause me for a tax event. Now, here's why Apple can move higher. And what I want you to know is I've been following Gene Munster and Dan Ives. They are the best ones on to actually follow when it comes to Apple. But here you go. The company added another $150 billion to their market cap today. That means over the past 8 hours of trading, Apple has added $350 billion in value. Some perspective. And he goes over everything that you want. What I want you to do is read the comment on this one. The comments are, it's not worth it, blah, blah, blah. Everything that they're saying is it's not worth it. Do not listen to these people. Understand that you've got to have your hypothesis. This is not one that you trade in and out of. I don't understand why people actually, start to sell their position. We talked about it yesterday. Somebody with a small portfolio asked me, should I sell up here? Well, no, I don't think you should sell. If you are losing sleep, you should sell. If these people cause you anxiety, you should sell. You should absolutely sell. This guy right here, Danil Sereda, he's an investing group leader at Seeking Alpha. He says the market is getting irrational. He goes over why he wants to sell it. He put a sell rating on it. That's it. He put a sell. I don't agree with him, but I understand his thought process. If we get the iPhone upgrade cycle, this is not expensive. This stock is absolutely not expensive. Here's another reason why I don't think that it's expensive. They had this whole hype with ChatGPT, and there was a question, who paid who? Because did ChatGPT value the 2 billion devices that Apple has, or did Apple value ChatGPT? My guess, Google said, yeah, you're going to have to pay for Gemini. ChatGPT probably said, you know what? We got $10 billion from Microsoft. We'll just put it on your phones. They have 70% of the AI compute now is going through ChatGPT. It is the largest, and they are continuing to add to it. Sam Altman doesn't look at this as a company that he wants to, he wants to make his money on the ancillary company that he does. But I do think this is a crazy, crazy good one. I would expect Apple to run to 250 at some point before the iPhone event in September. It may sell off, but I will only trim small positions. Again, I have no reason to say that other than, optimism and momentum. Momentum is a strong force in this market. And the whole way up, people were saying Apple's not worth it. Apple's not working. They're behind on AI. And then all of a sudden, they just get ChatGPT an announcement. They didn't announce anything like spectacular, and all of this stuff is coming. So it's hype, but momentum and hype are a real force in this market. Now, if we go and we look, the quant has this one as a hold. It's had it as a hold for a very long time. The whole time you were making money, it has it as a hold. The reason? The valuation and growth. Even the PEG ratio doesn't make sense on this one. It's expensive. This is why I say if you're building a position in Apple, you want to just buy it when you can. But you don't want to buy into strength if you're looking to time this thing. You want to buy into weakness. So wait for a few days. Right now, you've got hype rally on this one. You can see they're not growing their revenue. The second they grow their revenue, then the multiple makes sense. But right now, I would say hold off on it. I'm enjoying this, but again, it's, I think the biggest news was ChatGPT. They didn't pay Apple, and Apple didn't pay them. Microsoft gave them $10 billion. That's really a win for Apple. Now let's talk about Tesla. The first news that came out yesterday that was going to be a catalyst, and I said it was going to be a catalyst, is that Cathie Woods came out with a $2,600 price target on Tesla. You can say she's crazy. You can say she's nuts. You can say that, hey, I don't think it's ever going to get there. But the last time she made a prediction that it was $4,000, it got there. Now, did Tesla stock ever get there to $4,000? No. But split adjusted, it ripped through there. Today, you're trading on Tesla. We can look at Tesla. And we'll talk about it a little bit more because there's other news on this one too. You're trading at 188. You were just at 191 in the pre-market. But Tesla has a buy-in on the algorithm at $177. Now, the algorithm makes you 102% over 24 months in this one. So you want to listen to the algorithm. Algorithm got you out shortly after that. The algorithm will get you in today. It will get you in. The candle hasn't been created for today. So on tomorrow's scans, I'm going to see Tesla. That's how you use the 4-hour algorithm. It will get you in. Look at this one. It's opening up at 188. I would say that 200 is in the realm of possibilities. I just assume that it's in the realm of possibility. Do you want to buy at 188, 187 with 200 being your cap? No. When you get to 200 though, that's an interesting one because if you hold at 200, then you've got it all of a sudden at 250. And that's where it might drive to. But you've got a lot of things that need to go right for that to happen. A lot that needs for that to happen. Right now, I would say, and I'm looking at this, my parents have, a good 5 figures in this one, and they've held it for a long time. If this gets to 200, I'm looking to trim. If it gets to 190, I'm looking to start to trim. But at 188, I'm going to let this pan out because the next news on Tesla, again, remember, Kathy Woods has this $28,600 price target. The bear case, she says, is $2,000. It is based on a lot of things. I just used full self-driving the other day. It's much better, still not great. I don't think he's going to have robo-taxis at the end of the year out there driving without a driver. I just don't. I don't think that the software is there. But the other news of the day, and if you want to follow full Tesla news, you can just scroll down here because I'm putting in the full Tesla. The other news of the day is that Elon's pay deal and the move to Texas both seem to be overwhelmingly approved by shareholders. Those are 2 really good things. I will say, I still think 250, if we hold 200, is in the cards. But that's only based on this because if we go to Seeking Alpha and we look at the valuation on Tesla, it is crazy. There is nothing in this valuation. What do you have to do? You have to have full self-driving. You have to have the robots that they can sell, like Kathy Wood says. And again, that's in the article. You have to have a lot of things go right for this to be at 250. So I think there's better places in the market. I don't want to say don't buy this one because I do think it has upside potential. But just understand what you are buying is a company that is incredibly expensive right now. They are growing 10% per year, but the sector is growing at 2%. Now, I would argue GM, I won't buy GM, but GM is a better buy because look at their valuation. Now, both of these are just car companies, but look at this. They're 58% below. This is an alpha pick, is GM, and they've had it as an alpha pick now for about a month. I mean, let's look at the 1 month performance. The 1 month performance, I think it's been about a month since Alpha Picks picked this. You're up 6%. Alpha Picks is the best managed portfolio that I think I've seen in a long time. It's 35 stocks. We went over it yesterday. I put it in the newsletter, everything that they did with their portfolio review. It's right here on the link tree. Just go to the link tree right here, Alpha Picks. It's the third one. What is it? It's 2 data-driven stocks per month. So on the 1st and the 15th, you get a data-driven stock that has full analysis with an article sent to your email box that you can read. And how do they track their portfolio? They just basically buy it on that day. And then when they go to sell, they tell you when they go to sell. It covers multiple sectors. You get access to everything on day one. The performance to date significantly outpaces the S&P, 122% versus 35%. They had 96% of their portfolio beat on the most recent earnings. So again, Alpha Picks, GM is one. That's why I'm bringing it up. I'm not invested in GM. I didn't take that buy. You can read this article, that has it as a buy. But again, when you look at the quant, everything's interesting. Now, this Substack was interesting. It is from Capital Letters, and it says Ulta Beauty, double in 5 years. There are some pretty decent things in here about why Ulta, they think that Ulta will double in 2 years. One of the things, and this is what I wanted to point out, it's a cannibal stock. Between 2019, they mean that they're literally buying back their own shares. This is how Apple has grown so much. They use their cash to buy shares. Between 2019 and 2022, the company averaged 3.6% annual buyback. The company bought back 258. It still has 1.8 billion available under the buyback program announced in March 2024. This allows them to buy back 10% of their shares at the current price. And Ulta has been hit. I currently own this, so I may be talking up my own book. I own Ulta. It is up 0.8% today. Not quite a great one, but the algorithm has you in at 389 and you have confirmation. Now, I would warn you, the 200-day is moving negative, but the 50-day is starting to turn positive. The MACD on a lever, on the line right there, the RSI kind of a 57. It's come up a little bit, but algorithm makes you 6.8%. If you bought and held, you lose 1.1%. Be careful with those percentages today. I think TrendSpider changed some of the calculation. But if you look at this, we're right at the 200-day on the weekly. What happens when you hit the 200-day on the weekly, other than COVID? You kind of bounce back up. So again, read that article if you want. The one that has really performed well, in fact, has a cross-up today on the 4-hour algorithm, is ELF. Now, ELF has just outperformed anything. ELF has been phenomenal. This has another room to go, maybe to get back to this 212, 220 area. Okay? This may be another move. Algorithm had you in at 190. Don't you wish you would have bought at 190? Don't you wish, don't you wish? You've got this earnings gap up. I said this 164 was going to provide you support. That was the support. Everything that pointed to me was that this resistance level back here was going to provide you support. We had enough candles trading sideways that 164 was going to be support. If you want ELF, you want Ulta, read the article. It's interesting. I go over in the Daily Stock Bank newsletter in this education center down here. One of the things talks about divergence. And we saw two divergence on the daily candles and the weekly candles. So one, the story of regular divergence. This is Uber, and it just bounced up. And you can see the RSI is continuing to go up, and the stock price continues to go down. This means that buyers are showing up. Okay, this means that buyers are showing up when you see the RSI going up like that. When the stock price is going down, there are buyers showing up, but they're not. The stock price isn't doing it. Boom, you get that takeoff. Now, other divergence on Shopify. We brought up Shopify yesterday. People want to know about Shopify. I think it's an $80 stock. JP Morgan just raised their price target, and they said, hey, it's one of the best values. Look at this. This is, again, we're going up in the stock price, but we're going down in the RSI. That's not great, but all of a sudden you've got interest in this one. Again, divergence. You want to look for those things. It's a little bit of a, what's going to happen with Shopify. I'm sitting there holding. We're down 0.15 today. We had a nice big day yesterday. We still have confirmation. We're still over that 9-day. You're seeing a little bit of a button hook, but I like Shopify. It's an interesting one. Let's talk about earnings because AVGO, this is Broadcom. Now, what I want to talk to you guys about a little bit about Broadcom is, yes, I initially bought back here. In fact, I will tell you the exact date. Let me look in my Fidelity account to just see the exact date that I bought, because I brought this up. I believe it was during one of these buys that I got in the algorithm. But I will look. I will absolutely look, and I will. We're looking at it live. AVGO. Let's see. Tax lots. I bought first time March 7th at $1,400. March 7th. So let's put a little mark there at March 7th. We bought March 7th because of the earnings. Okay, I had a nice, and I bought at $1,400. We're going to flip that down. We bought right here. I'm going to flip it down. We're going to do the down direction. That's where I bought. Okay? I endured this downturn. What did I do? I bought again. I enjoyed this downturn. Okay? 3% out. I didn't get out. What did I do? I bought again. Did I buy during this downturn? I believe I bought at 1,300 again. Yeah, I've got 5 lots. So I bought. I was down. My point is, again, not every trade is going to be an immediate winner. If you believe in the company, if you believe in the stock, if you think it's got an upward trajectory, don't be afraid to buy and see it go down. But again, you have to make sure that, look at this weekly. We identified the weekly as having this trading range. As long as it didn't break down below 1,200, I was okay adding to it. Once we saw those bounces, I said, this is an AI name. What do? They provide all of the guts and the hardwares for all of this AI stuff. And so Broadcom had a crazy, crazy good time. We can look at Broadcom here. Now, is it time to get out of this one? I don't know. I mean, we can look at Broadcom. I think that one of the analysts says it's over, expensive stock. Yeah, phenomenal business. This one, Broadcom pumps on unwarranted optimism. It has as a quant. The revisions are an F because everybody was bringing down the revisions. But now they're bringing them up. You know why? They just announced a 10-for-1 stock split too. I'm up tremendously on this one. If you think my purchase was in March, let's see, March, April, May, and we're in June, 3.5 months. What's my total up? I will look at the total up. Let's see. Changed with 35%. And that's a pretty large position. I mean, we're talking, mid 5-figure position initially, up 35%. I'm happy. But my point is, again, if you're worried about this, because we're going to bring up SMCI in a little bit, we're going to look at that one. Beat and raise. Bernstein just raised their price target to $1,600 on this. If we look at where we're at, and I said, they were bringing down the estimate 1,667. Okay, we've hit that. It's a little bit of a rally. If we go and we look at Earnings Hub, which is my favorite site to look at earnings stuff, we look at it. You can see. So last time we talked about how they Q1 2024, how they reported $10.99, but it was expected only $10.84. Well, they didn't beat the $10.99, but they did beat the expected 1.1%. Reported revenue 11.96 last time. They made 12.49. They beat by 3%. So they're growing their revenue. It's a good company. Again, you can look at the growth of this. When we look at the growth, they're beating by 12% year over year. So the actual growth is there. The valuation, they say, is an F. And even the PEG ratio, it's only 3% below on the forward. But it's the valuation. So was I sure of this one? Absolutely not. Absolutely not. Was I confident that over 1 year I'll be able to make some money? Absolutely. Absolutely. This is just one of the AI names. Stick with AI and GLP-1 until the market tells you that we're in a bubble and you lose, 10, 15%. Oh, it's bubble time? Yeah, you can stay in that. But yeah, AVGO, earnings. I gave you Oracle. I gave you AVGO. There are a couple of earnings today, and I don't know too much about them, but Adobe, I would not invest in. Adobe's a mess. When they released their agreement, their user agreement, and they said we own everything that you create in our software, that to me is a broken business. They're going to have to go back on that. Do not invest in that. The other big one today is Restoration Hardware, which is a couch. They sell couches for $15,000 if you want to go in there. This is a segment that really kind of bolstered up, during post-pandemic. People just didn't have a place to spend money, so they spent money here. Lovesac is another one, which was a big retailer. They're up 3%. Restoration Hardware, if we just take a look at it, they reported 72 cents. They're expected to lose 12 cents per share. They reported 738 million. They're expected to report a down day of 721 million. If we just go and look at, and this is how I look at stocks, and I say, okay, this is just the overview of I want to show you, should you invest in a stock before earnings? Well, if you're going out and you're spending $50,000 on a couch, then yeah, I mean, you know, on Restoration Hardware, buy Restoration Hardware. Because, you know, then obviously you think $50,000 for a couch isn't a bad price. But I will show you, that chart to me is just ugly. Up and down, up and down, up and down. It's not in a business that I want it to be up and down. You can see the resistance clearly at the 200-day at 379. You're at 285. So expect your top to be 379. I mean, that's where you can expect the top to be. And do you want to invest in that one where it is? Well, let's go over to Seeking Alpha and let's look at RH. Because, let's look at the valuation of this thing in the quant. It is a hold. And why is it a hold? Well, the valuation's still expensive. And when you look at the valuation, they're not making money. They're not expected to make money. We saw it, 12 cents per share. They're not expected to make money. But their growth is expected to grow, 0.91. The sector median is 1.53. So they're 40% below. You look at their growth. Are they growing their revenues? No, they're down 15% year over year. We look at the revisions. Look at the experts. 19 revisions down, 1 up. So you could play this one as, oh my God, it's going to get a bounce because, you know, everybody's been bringing it down, lower expectations. I would just say there's something wrong. And I wouldn't want to invest in this stock until it gets over its 200. There are too many stocks that are going bottom left to upper right. This one is going bottom left to upper right, and then it just goes sideways. And at some point in time, this one's going to pop. You just don't want to try and time it. So, social request. Bisco, what do you think about Seagate STX? Seeking Alpha has a strong buy and seems to be a solid memory play. I'm not huge on memory, and I will tell you, my biggest thing for memory would be Dell. And that's the way I'm kind of looking at it. I like Dell. I mean, I like Dell's business, but let's look at Seagate because it has a strong buy. We can do it. And kudos to you for getting Bisco for having Seeking Alpha. I think that's, again, your tools are your key. Seagate, algorithm makes you 33%. Buying and holding makes you 38%. There's something wrong with these numbers today. They're a little bit different. I think something happened, but you can see algorithm got you in here at 96. That's a great one. You got a ex-dividend date coming up. There's really no solid place to look at this one other than I wouldn't get in because the MACD looks like it's already gone up. You can see what happened the last time the MACD got up here at about 2.91. You went all the way from 97 down to about 90. So that's a pretty big move on a pullback, but it gave you an opportunity to buy in at a lower price and then get out. I would look at the weekly and where are we looking at? I mean, we're looking at a solid, I can't tell you. This one's probably going back to all-time highs here at 113, 114, 117. That's probably where you're going. Honest to God, I would think that's where you're going. We can go and look at it in Seeking Alpha STX because he's already told us it's a strong buy in the quant. Let's look at some of the factor rate. Yeah, I can't argue with this one. Again, the valuation is an A. They're not making money. Their forward gap's a little bit high, but the PEG ratio is huge. Let's look at the growth. I don't know why that's an A other than, they're expected to grow. Yeah. So they're expected to grow out year over year. They're losing 25%. So you're kind of rolling the dice, but rolling the dice on a stock chart like this, probably not a bad idea with that golden cross right there. So Bisco, I'm in Dell. I think it's better opportunity, but you can do with what you want. Titus from Spotify, ARM, wants me to look at ARM. ARM is interesting. This was an IPO. I don't like investing in IPOs, but we've had enough time now. We've had, 9 months? And ARM is out there. The algorithm got you in at 101. I do know that their last earnings wasn't great. It was okay. It's a little bit expensive, but, and this is a big but, they have already talked about raising prices. Their licensing prices are already going up. This is part of the AI cycle. Now, I would tell you the quant doesn't cover this one, but you can look at some of the valuation, because you're still allowed to look at the valuation even though the quant doesn't cover it. And they're not making money. The forward, 99, it's expensive. Where's the peg? It's 3.45. That is incredibly expensive. You can look at the growth, 20% year over year. Profitability, they've got a crazy 95% profit margin. And it's got all the momentum. I have not taken up on ARM, and you can read some of these. It's overvalued in my mind here at 159. Do I want it at 100? Yes. I want it at 100. I mean, that's Titus. I'm not buying into this rally because I do think, while I think that ARM has its place, the licensing fees are going up. I don't think you're ever going to, go back to 100, but there's other places that I know better. And that's the only reason why I can't deny that ARM has been a fantastic buy. And I think it probably goes higher. But without knowing the details of the business, the licensing agreement, things of that sort, I would probably go over here and read these Seeking Alpha articles. That's just it. It's a wonderful business. I do agree. I mean, it's freaking licensing. And NVIDIA's in there, Apple's in there, Microsoft. Every chip goes through ARM. So the architecture is there. They've got the business. It's a good one. Luke Dogs, hi Gary. I'm only up 14% on AMD since 12/2000. Is it worth hanging on to, or should I sell and reinvest the money into Apple? Lou Dog, I am never going to tell you this or that. That is a completely personal decision, because this or that is always going to be your decision, not mine. Do I think Apple has more to grow than AMD? I think Apple's actually cheaper than AMD, but Apple has some type of, it's a little bit more expensive in that AMD is probably going to grow. I don't think AMD is a bad investment, but you can see right here, we got overhyped here, and NVIDIA has just taken them over since March. If we go over here let's look at AMD. We're going to do a little bit of a chart here, because I want to show you how big of a lead NVIDIA really has. The valuation of NVIDIA is crazy. We're just going to look at the stock price since March. We're going to look at AMD versus NVIDIA. And we're just going to go back since, we're going to go March 1st. Let's just go March 1st. And we're going to say 2024. We're going to say June, and we're going to go to the 13th. We're just going to look at that, okay? This is just 3 months. Look at that difference. I mean, that's the difference. You would have made half your money. Say you had $10,000 in this. You would have made $5,000. You would have lost $2,000 in AMD. That's how big a lead that NVIDIA has. Do you want to look at this? Well, let's look at the peers portion. And this is how you use Seeking Alpha. Let's look at the peers. We're going to take this out. We'll keep Qualcomm in there because that is a core portfolio. We'll keep Micron in there because that's a good one. Intel, dead money in my mind. But we're going to add in NVIDIA. And we're going to add in NVIDIA here at the end so that we can take a look at the four of these together. Because Qualcomm, we can take a look at the total return. Because there is a dividend portion to this. So we can look at the 1 year. You know what? Let's just look at year to date. NVIDIA, clear winner. Micron, second. Qualcomm, third. AMD, dead money. It's just dead money. We can look at the quant rating. Micron and NVIDIA, strong buys. NVIDIA, new strong buy on the quant, by the way. On Wall Street. Wall Street, strong buy on Wall Street. The quant rating, they're all holds. So quant rating, it's a wash. Seeking Alpha Analyst, it's a wash. It's tied. Wall Street, everything is a strong buy on Micron and NVIDIA. I mean, it's just a wash. But you want that one. Valuation, NVIDIA is an F, I would argue. It's probably an A. Growth, you can see AMD A, NVIDIA A. Profitability, B+, A+. Momentum, B+, A+. So I would argue you want NVIDIA and AMD. Do I think you should buy Apple? I don't know. I mean, I don't know your portfolio. How much Apple do you have? That would be the thing. Do I think Apple will outperform AMD? Yes. Personally, I believe so. And the only reason I say that is because 50% of my freaking portfolio is Apple. Holy crap, I have a hawk up here. Oh, he's going after some bird eggs. But yeah, I think Apple will outperform AMD. Do I know for sure? Absolutely not. But Lou Dog, I'm not going to make that decision for you. That is something for you. 50% of my portfolio is in Apple. I own what, $20,000, $30,000 worth of AMD. It's not much. It's not much at all. But I do own it. I have exposure to it in ETFs too. So Valentino, Southwest Airlines. So Southwest Airlines, it was announced a Sunday, I believe. Elliott Management got in there. We saw a big pump. Valentino, I will tell you this. I do not like airlines. You can trade them, but don't own these things. These things are just a mess when it comes to owning them. Look at that. Do you want to time this one? Do we have more room to go because they can't get Boeing planes? The CEO thinks he's doing a good job since he took over. I would argue no. I don't know why you'd want this one. Honest to God, I just look at that weekly chart and it tells me, hey, until we get back over this 200-day or actually start to use the 200-day as resistance, there is nothing in this stock that I like. Cade, given Apple's current price versus Microsoft, do you think Apple is better long-term investment than Microsoft with more room for growth? I currently own both since 22. Would love your input. I will tell you. So here's the difference that I look at is that Microsoft just spent $10 billion with OpenAI. Apple got them to input into their system for free. I mean, which one would you rather go for? Now, I will tell you, 50% of my portfolio is Apple. I do own Microsoft as part of my top 3, I believe. And let me see. I can look. Let me see real quick because I think I sent this. I went over this a few weeks ago. Let's see. Okay. So here are my top 3 holdings. And this is as of, 6/11. So 2 days ago. Apple was 40% of my portfolio. Amazon's 8% and Microsoft is 7%. I mean, that's how big Apple is in my portfolio and how big the other ones are. I believe in both companies. What do you want to do with both? I would just hold them. I don't think you trade these things. I think you hold both. We are in an AI market. Both of these companies have benefits for AI. Microsoft specifically with cloud. With Copilot, they are monetizing Copilot. They are probably in the lead there. We talked about it during the last earnings call. I said, hey, if they even mention Copilot, this is a $450 stock. Well, where did it go to after the last earnings? It went up here to $430, didn't make it to $450. We're at $441. It's probably a $450 stock. I bought a ton here at $394 right before. This was the trigger that I bought a ton of Microsoft with. I bought $300,000, $400,000 worth between, a bunch of accounts. So do I believe in one over the other? I believe Apple will outperform. I do. And it's based on valuation. And so when we go to Microsoft, we'll just look here in Seeking Alpha. And again, you guys can do this on your own. But you look at the valuation of Microsoft, and specifically, you want to take a look at that PEG ratio. And it's high. Apple's is higher. And so Microsoft, probably they're growing 13% year over year. Apple is not. If we go and look at the peers, let's see, did it pull up Apple? We just want to look at Apple in this. No, it doesn't pull up Apple. We're just going to do Apple and Microsoft. We're not going to worry about Oracle. We're not going to worry about ServiceNow. We're not going to worry about PenW, CrowdStrike, or Fortinet. We're just doing Microsoft and Apple. And this is how you use these tools. And remember, use my link tree to get the tools because you get deals. But here in Seeking Alpha, you can do this. Look, 1 year, Microsoft's up 32%. Apple's up 16%. Do I believe that those will sync up? I don't know. I mean, Apple's expensive. Look at 3 years. You're about the same, 64 and 69. Look at 5 years. Apple's up 341. If I had thought that Microsoft would outperform year to date as much as it did, I mean, it's up 17%. Apple's only up 11%. But I was screaming for people to buy Apple at 169. I was screaming for people to buy Microsoft under 400. Do I think that Microsoft could go back under 400? Absolutely. Do I think Apple could go back under 200? Absolutely. I mean, we are in an AI market, and these are incredibly expensive stocks. If we go down and we look at the valuation, look at the PE, 37 for Microsoft, 32 for Apple. Look at the forward, the gap. The gap forward is 2.72 for Microsoft. It's 3 for Apple. So you've got crazy, crazy valuations on these. Now you look at the revenue year over year. Microsoft's grown 13%. Apple's down 0.9. Apple, if they're gonna have any chance of continuing to grow, they've got to buy back the stock and they've got to grow their revenues. Profitability, look at Microsoft, 69% your margin versus 45% for Apple. I own both. I own a significantly larger position in Apple than Microsoft, but I own both and I own large amounts of both. So I don't think there's one or the other that you pick. I have picked wrong in the short term. I have picked right in the long term. Because if you go 10 years out, look at Microsoft at 9. Oh, I picked wrong in the long term. Microsoft actually has outtaken Apple on a 10-year chart. 958% versus Apple at 844. Am I upset with either one? No. I mean, we can look at total return. Let's see. Because there are, it even looks bigger on total return. Look, 1,145% over 10 years. So, Cade, just own both. Just own both. I mean, don't even look at it. Don't even think about trading in and out of those things. Aaron, good evening, Gary. I've been enjoying the pod. What are your thoughts on SMCI? Could you see a pop coming with recent consolidation? SMCI just released some news about liquid-cooled supercluster growing in AI. And this is what VRT does. So essentially, Supermicro is getting into this. Now, Supermicro doesn't have anything on the horizon as far as a catalyst. And I've said this before, we're at $800. If you can get this under $800, buy it. Just buy it. I am not adding to this. I already have significantly large positions at 300. I have significantly large positions at 500, I believe. I have significantly large positions at 1,000. I am not selling this one. SMCI is just a stock that you buy and you hold it for long term. My significant long-term positions come up on 1 year in my brokerage account. They are at $300. So those gains are phenomenal for 1 year. I want to pay 15% tax. So my position may differ from yours. Read this Supermicro liquid cooling supercluster growing in AI era. Initiate with a buy. This is what you want. It is a strong buy in the quant. There is nothing wrong with SMCI. It ran too far, too fast. And what are we doing? We're going sideways. You're seeing the 50-day just crossed under the 200-day. Do we have more room to go down? Absolutely. Absolutely, we have more room to go down. From a weekly standpoint, those Bollinger Bands are as tight as they've been. They're as tight as they were here at 89 back in 2023. They're as tight as they were here when I was screaming there's a gap up at 350. This was October of 2023. And we were yelling, hey, you want to buy this thing? I started buying in July. When did I buy? I think I started buying in July. I started buying. I enjoyed this nice little run up here. You can see that nice little run up. And then I enjoyed a sideways trade for 4 months. 4 months. I bought here at 1,000. I'm enjoying this sideways trade for another 4 months. This started in April. April, May, June. We're only in month 3. I would expect August or September to have a bump. Oh, look, August 5th, we have earnings. We have earnings. What happened on August last year? The stock crashed. That's a 27% decline in the period. It opened at 352. It closed at 254. So expect volatility. But in my mind, Aaron, I just think you hold this one. I think we're going sideways. The valuation doesn't tell me that we're crazy out there. What you have to worry about with SMCI is this valuation, or I'm sorry, the gross profit margin. The gross profit margin is horrible, horrible. If you look at that against Dell, remember, Dell stock price is at 130, and the reason is the profit margin at 23%. Okay? SMCI is at 15%.
Do they have the ability and the pricing power to increase their profit margin? To say to people, we're SMCI, we're going to charge you more. HPE, which just killed it based on some server stuff. They have a profit margin of 34%. So it's just a matter of which one you want. Just which one you want. That's it. But again, they will be held if you see SMCI come down from a 15% profit margin to like a 10% or even a 14%. You're going to see the rug get pulled out of this stock. Even though the valuation is not bad at all. The PE is high. The growth, again, are they going to grow their revenues? We can go over here and we can look up, Earnings Hub. It's not just on the date of earnings. You want to look at some of the reports and some of the expectations. So if you look at oh, come on. I don't want SMCI. Let's just look up SMCI because we can look. Okay. Last time they beat earnings per share by 13%. They missed on revenues. That's not great. And this is what drove the stock the last time was all of these crazy beats by 13%, 19%, 7%. November 1st, 2023, we can see how the stock reacted to that. November 1st, that was this earnings. Didn't do anything. I mean, it traded sideways, continued sideways trades until January 29, 2024. What did it do on January 29, 2024? Well, look, it beat by 13 and 19%. This one beat by 13%, but lost on revenue. We can just go look at the most recent quarter. What did it do? It's just trading sideways. So the market, again, when a stock moves this fast, you want to expect some just kind of consolidation. Mark, AVGO, is it a buy and should I buy before or after the split? AVGO is, I wouldn't buy it right now. 3 days minimum. You want to wait until after the earnings. I wouldn't buy it now. I mean, we're up 14% today. You're going to have a gap here. More than likely, you might even fill this gap coming back down. It's a little bit expensive. You want to wait and to see how the market shakes this out. Now, if you're thinking about a year down the line, like I was back here at 1,300, buy it. I mean, just buy it. I was thinking back here, this is where I bought it. I endured this downturn. I endured the downturn, but I bought it right before its earnings. I enjoyed the pop that it had, but it just continued down. Did I get out of it? No. But Mark, again, stock splits, they're pretty good for the stock. It's not always great. Sometimes they're down. We went over it with NVIDIA about a week ago. Matthew from Facebook. Hey, Gary, your thoughts on Vail? I bought it 1876. Let's see, Vail. Currently at 11.14. Should I cut my losses, buy the dollar cost average down, or just hold? Vail's an energy stock, I think. Let's see what their stuff is. Vail. They, it's valuation A+. We can look at that one. But they do iron ore and iron ore pellets, nickel, and copper in Brazil. 1 year. I mean, the stock chart looks ugly. And it even looks ugly. I mean, what's going to be the catalyst here? I mean, if it looks this ugly, my question to you, Matthew, I don't know this space. I don't know this stock. I know it is in I think it's in the energy names that we trade. No, I don't even have it in the energy names that we trade. I don't like it. I would go back to you and ask you, why'd you buy it? I mean, what's the story as to why you bought it? Because if you bought at 1876, that is probably, let's see here, I'd say March of 2022. That would be my guess. And ever since then, you haven't seen any that you saw this turn up from 13 to 18. But you're seeing lower highs and lower lows. So we always talk about pre-pandemic. Pre-pandemic, this was a $13 stock. Probably gets pumped up there again. If you need the cash, sell it. But, again, I think there's better places in the market that will pop more than Vail. So for me, if I was down that much, I'd take the money. And again, I don't do this for everything. Like I own Etsy. Etsy was way down yesterday, and I'm looking to sell it. One of my alerts that I have up is for Etsy, when to sell. And I didn't want to sell into strength. But it was way down yesterday. And the algorithm didn't get me out. But I should have gotten out here at 65. We're at 61. I'm going to sell this one. I'm selling into weakness. I'm not selling into strength. I'm selling into weakness. And this is a big loss for me. Another one that I'm looking at is Square. It's about managing your portfolio. If you need the cash or if you think the stock is going lower, just cut your losses. But I don't know Vail well enough, Matthew, to tell you, oh my God, it's going to go lower. Square is one that I didn't want to sell into strength. The algorithm has me in. It did have some strength. Doesn't really have strength right now. I don't know what I'm doing with it. But again, you have to manage your own portfolio. Now let's talk about scans. There's a couple of good ones. Snowflake has a buy. And Brad Gerstner from yesterday said Snowflake is still a buy. In his mind, they're still in it. This one has a cross up here at 130. You're trading at 128. Do you want to get in there? Remember, Snowflake, I say this is the range that we're in Snowflake. It's down at the bottom there. So if you think that we're going to pop back up, 200 is the key there. But if you think we're going to pop back up, that's a good one to play. POWL, which is an alpha pick. This is Powell Electric, and this is Powell Industries. I think they do electrical supplies and things of that sort. This is one that is pulled back. Now, you do have a top there at 197. I'm looking to get in here at 176. I think it's a pretty good buy. The valuation of this one is not crazy. Again, use your tools. So we get a cross up on the 4-hour algorithm. Then I go to trend to Seeking Alpha and I say, okay, what's the quant say about it? Well, it says it's a strong buy, and the only mark against it is valuation. And so we look at this PE at 21. But we look at the PEG ratio, and it's a little bit high, but it's not crazy high. It's number 2 out of all. But everything else is a buy. Again, year-over-year revenue growth, 42%. Look at the profitability. They have a 24% profit margin. Now, the sector is 31%, so maybe they have some ability to raise that margin. But when you look at this one, again, you want to point out that the all-time high there provided some resistance at 200. If I'm buying here at 176, I'm expecting to buy and get to 200. But I do see this gap down here at 140. Now, if we look at this on a weekly and we go back and we look pre-pandemic, this was a $49 stock. A $49 stock just slid down on the pandemic. We went over that 200-day. Now, you're still in a very, very positive way. You have confirmation over that 9-day. So do I think that we could get there? I think bottom left, upper right. It's a little bit high on the MACD. I want to get into this name. Haven't had a chance to. IWM has a cross up, and it's because of the big move yesterday. And it's because Powell said, hey, we're going to have one rate cut. I would argue with IWM that you want to buy under 200. The 205 mark is a great buy. You're right at the 200-day. This is the small medium caps, but you want to buy under 200. So we talked about ELF having a nice little play here with a scan, and it could go for a second run here. It's up 0.85%. You're looking at about 220, 215, 216, somewhere in that neighborhood as probably your top on this one to get above. We have GE Healthcare, and this isn't everything. All of these will be in the newsletter, but GE Healthcare is one. This is one that has a cross up here. You got a nice earnings gap that probably gets filled. It's still a good business to get into. So you got leveraged ETFs. All of the Tesla stuff is just flying. Tesla is up 6.2% at 188. 190 seems to be a resistance level for that one. So again, you have opportunities. Now, how do you find these opportunities? You use the tools that I have or that you have. Here's TrendSpider. Again, it's half price. You get 6 months for free. Seeking Alpha, I save you 20% off Seeking Alpha. You see how I just found the stocks technically, and then I go look at the fundamentals. That's why you use Seeking Alpha. I use you 20% off, and you get a free 7-day trial when you sign up. So go and set up a trial at Seeking Alpha. Alpha Picks, we talked about it. If you just want ideas, just get Alpha Picks. Now, if you don't want TrendSpider but you don't have a charting program, I would urge you to sign up for Webull. Get free stocks, 3, 20, or 75. Free shares when you sign up. You use this fourth link down here. It's Webull. They have a desktop software that you can use. If you want AT&T, if you want visible cell phone service, anything that you do on here, you can support me as a podcaster if you enjoy this, or just reach out. You can tip me as well if you make money. I got Venmo, PayPal, or Cash App up there. Anything that you want, support is appreciated. Okay, we will talk to you tomorrow. I didn't expect to go an hour, but I went a freaking hour. Okay, talk to you later. Bye. Brandon, you had TrendSpider guy go over every candle with you? I mean, I'm shocked that I know they changed their calculation. And I remember them changing their calculation, and I didn't see anything like wacky with their calculations. But this is the first day that I've seen wacky stuff on calculations. So, let's see. I'm up 0.28. So I'm underperforming the market. And it's Apple. I mean, Apple drives my. Apple is up 0.18. AMD's down 1%. Wow. I'm making $8,000 on AVGO. Sweet. Microsoft paid a dividend. So I can't see. That's not included in the... Oh, it's down. It's kind of even flat. I mean, the market definitely could use a day where it just pulls back a little bit. Wow. I'm up a couple thousand there. Okay. Brandon, you had somebody from TrendSpider go over every candle with you on a strategy. TrendSpider is just awesome. I mean, that's the reason I'm with them, is because of their customer support. I can email those guys and, just contact us down here. I may email them about the results. Thoughts on SOFI, Tora? SOFI at some point in time will be a $10 stock. I mean, it's not one that I'm putting money into and letting it sit there in a market that's just soaring. But if you wanted to put some money into SOFI, this is the range. I mean, this is from $9.28 down to $7. So if you want to buy $7 here, I'd probably wait to see it go to $8 and then buy it at 8 and sell it closer to 10. But from a long-term standpoint, it's, the valuation is what kills it. It's expensive, but you get hyped up. You get hype up rallies with this one. It's not making money. The valuation is nuts. I mean, the gap, the PE forward, it's crazy. It's nuts. They don't release a lot. When you look at the growth, they're growing revenue by 34%. But when you look at the profitability, I mean, they have an 82% profit margin, but their net profit margin is ugly. Their net profit margin is ugly. And the momentum. Momentum is a super strong force in the market. What do I think about DEC? I don't wear Hoka shoes, and this is based on Hoka shoes. It's a hold in the quant. I don't think it's bad. I don't think it's horrible, but I do think that it's run up quite a bit. And if we look at DEC in the 4-hour algorithm, it's on the watch list. So if you have TrendSpider, you get the watch list, Moneza. It's pulling back. I mean, algorithm had you in at 825. I don't know why you would, if you're willing to trade stocks like this, I don't know why you wouldn't get the algorithm, because it makes sense to make this. What I don't understand is, again, I think these are turned around. because I'm seeing 195% performance versus 310. But all this green tells me that the algorithm's outperforming the asset. And even this blue line here, the asset makes 195. I think it's just turned around that you actually make 310% on the algorithm. And that's what this green line here tells me. So I think they changed their calculation, and I think it's flipped around. Here, in fact, I'm going to, let's see, contact us. Send message. Believe the strategy tester performance metrics are off. Do. Okay, and I'm going to send them a maybe I should just share the. Okay. Yeah, they changed the calculation, and they said it. They reached out to me and said it shouldn't affect yours, but this, if you have it, Chris, look at DEC. If you have the 4-hour algorithm, go into DEC and take a look, and the results on the strategy. It says 195% versus 310% for asset performance. When you look down below, the asset actually makes 195%. And the strategy, which is the green line, makes 310%. So I think they're just swapped backwards. But I don't know. I don't think that's a setting that I control. Ugh. But they're really good about getting back to me and stuff. Okay. I love the contact us button. Oh. Chris, just send me an email. Send me an email. I'll have them switch you over to my platform on the back end, and I'll just share you all the stuff. You're here enough. You need it. You're doing fine without it, though. But just send me an email. Go to the link tree and just send me an email, and I'll work it on the back end. But I'll send you the welcome letter with everything. And then what'll happen is you'll get the algorithm, and you'll say, "It's that easy." SMCI has a good reaction to that freaking just super cooled stuff. I mean, okay, I gotta go do the newsletter. I will talk to you guys tomorrow. I'll be back tomorrow for sure. Two new people started recommending me on Substack. Okay. Take care, you guys. I'll talk to you tomorrow. See you. Bye.